Hey everyone, welcome back to our channel. In this video, we're going to talk about how to buy a home in today's market. I'm Maria Ho, local realtor here in Mississauga and the Greater Toronto area. Have you decided to buy your home, but it kind of feels like you're navigating a maze in the dark? What if I told you, with the right knowledge and the right tools, that your dream of buying a home is more achievable now than when you compare it to past years like 2023? In this video today, I'm going to guide you through the journey of buying a home in 2024. We're going to discuss the latest market trends to what you need to focus on as a potential home buyer to get the best bang for your buck. By the end of this video, you're going to be equipped with the essential knowledge and confidence towards buying your new home. In 2023, after 10 interest rate hikes, finding an affordable home felt like searching for a needle in a haystack. But in the past 3 to 5 months, and now in 2024, there's a glimmer of hope as we're seeing average home prices have dipped since the peak market of 2 years ago. While house prices are still on the higher side, prices are stabilized and it's more of a balanced market for home buyers and sellers. We're anticipating interest rate cuts in 2024, so that also gives us more confidence and more people who have been waiting on the sidelines will re-enter the market to search for a perfect home. In this video, I'm going to give you some very important tips to prepare yourself to successfully navigate the challenging market. Whether you're a homeowner or first-time buyer, I'm going to give you some great strategies. We're seeing a lot of success with many of our clients. So many homeowners and buyers have come to terms with higher mortgage rates over the past 2 years. In order to minimize the higher monthly payments, there are 3 things you can do to adjust your home purchase preferences. 1. Save up for a larger down payment. You can use a gift or inheritance or borrow from the bank of mom and dad. And you can also borrow an RRSP line of credit from the bank and use the RRSP contribution towards your down payment. A larger down payment means a lower mortgage loan, which means a lower monthly mortgage amount. Number 2, choose to purchase a less expensive home type or a smaller home, like a 1-bedroom plus den instead of a 2-bedroom condo, or a semi-detached instead of a detached house, or a 3-bedroom instead of a 4-bedroom house. Number 3, look at a different location a bit outside the Greater Toronto area. Depending on your work commute and your family and your lifestyle, you can move to more affordable suburbs areas. For example, several of our clients are moving from Mississauga to Kitchener, Cambridge, Hamilton, or Oshawa, where they can trade for a bigger home for a much lower price. The next step in buying a home is your budget and finances. You need to look realistically at your debt-to-income ratio. Now, what does that mean? This means you calculate your debt, such as your car payment, any outstanding loan, and your new monthly mortgage payment, property tax, utilities, and insurance. A general rule of thumb is to keep your overall debt-to-income ratio less than 44%. This is important so the rest of your income will cover your other basic needs like groceries, meals, transportation, daycare, and entertainment. The lender, they're not going to be looking at those expenses, so you need to have a full understanding of your own budget and your monthly finances, how much you spend each month on your essential needs, and make sure that you are comfortable with the new monthly payments for your new home. Having a stable income is key to buying a home. Banks and lenders, they want to see a consistent source of income. You need to show financial stability. So having a salary is great. Now, before you give up your job, keep your steady salary until you can get a mortgage and buy your home. Now, if you're self-employed, make sure that you show declared income on the last 2 years of your income tax. Don't worry, there are many lenders who give mortgage based on stated income, and they need to see consistent income deposits in your bank statements and the past 2 years of your income tax. Now, don't start your home search or even talk to a mortgage agent until you look at your credit score. This is super important. You need a good credit score, like more than 620 or higher, because a higher credit score will give you lower interest rates and better terms. You can get your own free credit report. Go to equifax.ca or other websites like Borrow Well. When you pull your own credit, it doesn't affect your score. It's a great idea to look at your credit report, make sure there are no mistakes, all the information is accurate and correct. A couple of great tips to keep a good credit score. Don't open too many credit cards or retail stores credit cards. Even if they give you an incentive or a bonus, it's not worth it. Don't do it. Another thing is put an automatic minimum payment on your credit card. You can do that on your mobile banking app. I just did it recently and it's great. So you'll never be late on your payment date because late payments and missed payments bring your credit score down. You want to avoid that. Next, don't start driving around looking at homes until you have a pre-approval for a mortgage. This is the only way that you will know exactly how much house you can afford. So instead of looking for like $1 million property, maybe you should be looking at $900,000. You need to talk to a mortgage professional, either at your bank or better yet, to a mortgage broker who can shop around for the lowest interest rate for you. You need to know exactly how much you can spend and afford on a property so you don't go above that amount. Many home buyers, they overbid in the past and they bought out of emotion or a fear of missing out, and some of them may have regretted it. So know your number and stay logical and you will do great. Another word of advice is when you have a mortgage pre-approval, calculate everything on a monthly basis. Know how much your monthly mortgage payment is, how much you're going to have for utilities each month, how much for property tax each month. Make sure you're comfortable with this monthly budget. So for example, if you're currently paying $2,500 for rent each month plus utilities, so that's roughly $2,700 per month. And now when you buy your new home, your monthly budget is going to be $3,000. You want to make sure you're okay with this amount. And if you're not okay with this, then you need to adjust to a lower purchase price or a lower condo fee. Talk with your mortgage agent and realtor to help guide you. With a team of professionals, you're not alone in doing this. Now that you have your pre-approval for the purchase price of your home, you will look online for what type of property you can get in this price range. So here's a homework you really need to do before you get in your car and drive around to look at houses. Write down a list of your must-haves and deal breakers. Make 2 lists. A list of must-haves could be things like 2-car parking, 3 bedrooms, 2 full washrooms, a fenced backyard. A list of deal breakers are things that you are not willing to compromise on. For example, you have to have parking. You must be within a short drive to the GO station, or maybe walking distance to your kid's school. Nowadays, a lot of people have to have a basement suite for rental income to support the mortgage payment. Have this clear list of must-haves and deal breakers before meeting with your real estate agent and before driving around to look at houses. This is the most helpful advice I give to my clients. Because looking at a ton of properties can be confusing. This will save you a lot of time when you have a clear vision of what you must have in your new home. Here's another knowledgeable tip for you. The most important thing when buying your home is location, location, location. You can change the interior things inside the property like the paint color, flooring, remove the carpet, change the shower, but you cannot physically move your home and put it somewhere else. So take the time to use Google Maps to find the distance to your work, to your kids' schools, how much time you're willing to drive or commute, what amenities you have to have nearby, then map out the radius of the suburbs and the neighborhoods that you want to live in. When you take the time to map out your ideal neighborhoods, have your list of must-haves, know your monthly budget, and get a mortgage pre-approval on hand, you now have the knowledge, the tools, and the confidence to find your perfect home. If you found this video super helpful for you, please hit the subscribe button, leave me a comment on any other ideas, and if you have any questions, please give me a call or a text and I'll be happy to chat with you one-on-one about your particular situation. Also watch my video on my channel to find out about the closing costs in under a minute.